Good afternoon, folks. So I'm going to ask you all if you're paying attention and you're on Twitter. I'm looking for a 5x5. This morning I was doing a live stream and I took the chance of not asking to see if you could hear me, and I ended up talking for an hour and none of you could hear what I was saying. So I'm just waiting for a confirmation. Thank you, Chummy. Institutional owner vote trader, thank you. Just want to get one more. Spiritual trader, thank you. Cassia, thank you. JR, thank you. All right, so this is going to be brief, real brief, because it's going to be just talking about the NASDAQ. I kind of want to bring you up to speed as to what I was trying to convey this morning. The NASDAQ here on the daily chart, it's inside this range here. Okay, so while we're in this range, I'd like to see it trade into this, or try to trade down into this rather. But because it's non-farm payroll week and tomorrow is non-farm payroll, I might not get what I want. And that's why I try to refrain from trading on Thursday and Friday. And I kind of went through a lot of that this morning for the sake of people that aren't familiar with what it is I try to teach my students to avoid during this particular week. And because of the volatility, because of the high level of manipulation that takes place on the Thursday and the Friday of non-farm payroll week, I try to at least try to inspire patience in the new students, because they see these news drivers that are red folder or orange folder, like high or medium impact news events, and it usually ushers in a lot of volatility and price fluctuations, which is exciting to a new trader. And impulsively, new traders like to go in and heavy-handedly over leverage their trading accounts, hoping that they get lucky. And that's like lottery trading. And I try not to promote that at all. And I try to beat it in your head as much as you don't like to hear it over and over again. New students have no excuse, because when they come here, they hear me preach very hard and fast about how you shouldn't try to do that. And I made the point this morning about how students of mine that are more mature, they're more seasoned. That means they have more experience and they know what their model is. They themselves can trade on the Thursday and Friday of non-farm payroll. But as a responsible educator, I try to convey the idea early on in your learning to try not to do that. Okay. And that way it's in proper context, because I've done live trading. I've traded with real money. You've seen it in the last few years where I've done those days. I've done Thursdays of non-farm payroll, and I've done the actual non-farm payroll event. And while that may be justification in some of your eyes for you to do it, I don't think it should be. Okay. But there are wonderful studies for understanding and learning how the market will seek liquidity, because there's no greater lesson to learn than looking at it on these days, because of the high degree of manipulation. And many times there can be manual intervention where even my stuff won't work in that environment, because you'll see something, you'll expect to see it, or me as the operator and the author that created all this stuff, I might do it incorrectly because of an outside influence that creates a run on price that would be unexpected by me. And the season or conditions that those environments produce that very event are like FOMC, CPI, the non-farm payroll Thursday and Friday of non-farm payroll week. So because of that, I teach my students to primarily focus on the Monday, Tuesday, and Wednesday up to 11 o'clock on Wednesday. After 11 o'clock, any trading that you do, if you're brand new, you're not seasoned as a trader, or not versed in how to read price action, if you're brand new, you should not try to engage it, not even with a demo, because the results are going to be probably not supporting you, okay, or encouragement, okay, because you're probably going to do something incorrectly. And you can do it incorrectly and blow your funded account challenge, your funded account, your live account, your demo. Either one of those is bad, especially if you've been told, especially by me, that you shouldn't, if you're brand new, if you're a neophyte, you're not versed in how to read price action fluently, try to avoid doing anything but just tape reading. Okay. So I was by myself. I was going to have my son with me this morning, but he wasn't actually there. So it ended up becoming a little bit longer of a session that I wanted to do. And I spent time talking to you, unbeknownst to me that the audio wasn't going. And I've done this in the past with mentorship videos where I've produced videos that were rather long and then discovered later on that the microphone was muted or the microphone wasn't plugged in or there was some other technical issue. This morning, I don't know what happened, but it just so happens to be that was the same day that I did not ask like I did today and like I usually do because it's been fine. I haven't changed any settings on OBS, and for whatever reason, there was no audio. And I would love very much to be able to remember exactly what I said. And when I closed the live session this morning, I felt that it was one of the good ones because of the things I was talking about. And I don't have a script. Like I don't have things that I say that are typed out. I'm reading. That's why it's very easy for me to go down uh, tangents and rabbit trails and go off topic, but really it's all part of the same thing. And for that, I apologize. I wish I could have had the audio because it was actually a very good thing. But I'm going to try to go through the salient points, okay? And for the folks that like to see these things and like be highly critical and say, well, it's obvious now because it's hindsight. Once I discovered that there was no audio and everything that I was talking about audibly, and I was talking the entire time because that's who I am, the idea of not having audio, I tried to condense everything I could right before the move this morning. And I went onto Twitter and explained that the things I'm going to talk about here, this is what I was looking for. Okay. If you watch the live stream that does not have any audio, you'll see me pointing to certain things. And for the students who've been around me a long time, you probably heard my voice talking to you, even though I wasn't saying anything, because you know what I'm pointing to. You know what I'm trying to draw an allusion to, not in illusion, but allusion or alluding to something that I've already taught in great detail. Now, as a new student, or if you're brand new, it's going to seem like it was a complete waste to look at that whole entire live stream this morning when there's no audio commentary. But there was levels in there that I was referring to, and I was going to come back later on this evening and kind of like bring you back to where I was saying what I was expecting not to see, what I was expecting to see, and what we actually got. I want you to understand that this could have been a day where it didn't deliver like I wanted it to. And in fact, in the audio commentary this morning, I was actually saying, I want to be wrong today because that way it solidifies why you should respect the caution that I'm presenting to you as a student. When you come to me and you're trying to learn, I know where you're going to have a problem. I know most of the questions you're going to ever ask me. And I know the progression of learning this is not going to be as fast as all of you want it to be. To help you stay in it long enough and not discourage yourself, I tell you when not to trade. Not that you can't trade on this day, not that you can't trade tomorrow during non-farm payroll. You can. Nothing's saying you can't. But if you don't know what you're doing, the likelihood of you hurting yourself or getting emotional about doing something incorrect or being lured into doing something opposite to what you thought was going to happen in price, and then it starts running aggressively the other direction, and then chasing it, and then that be the wrong direction too, and then turn a small little boo-boo of a loss into a larger drawdown or completely blow your account. That's the typical process or cycle that a trader that doesn't know what they're doing does on this very week of trading. Every single month, when I was a younger man, every single time that I was blowing an account with real money, I was doing it on the first week of the month because my association to the big fluctuations in price was if I get it right, I can make a lot of money. So that was always the constant lure. So I was kind of like talking about that throughout this morning's live stream, telling you that I'm going to outline it. Okay, I'm going to outline exactly what I believe wholeheartedly that I think is going to happen, but I hope I'm wrong. I want to be wrong today. I want this to not do what I want it to say in the live stream. And then because I didn't have all of that recorded in audio, I went on to Twitter and I told you exactly what I thought was going to happen with a chart. It was going to go up to a fair value gap and then start repricing for sell side. What's the sell side? Everything I pointed to in the live stream, but in the chart, the initial draw was the one I showed you. Okay. So if you're not following me on Twitter, it's real easy to go over there and click on the link and scrub back through. There's a few tweets that you'll see. Just click on the media button in my profile. It'll take you right to the thing that I said, I want to see NASDAQ trade up to the fair value gap, the pink or red fair value gap. And I mentioned there's a blue fair value gap that it used as it would. I feel kind of uncomfortable talking about this because I know there's a handful of you out there that are they love to be highly critical, and they're not really here to try to learn. They're just in here to be disruptive, and that's cool. I get it. But for the sake of the folks that want to learn, I feel like it is. I was really conflicted about even doing this review. Like I was just going to leave it the way it is. My long-term students and the people that follow me on Twitter, they literally watched it unfold today, and we've been doing it for a long time. For the folks that had just recently discovered me, they had a chance to see me tweet very specific things and then watched it deliver. So that's the takeaway. But the part you don't understand or know about, because you couldn't hear me say it, I wanted it to fail today. Like I wanted me to be wrong. I really wanted it to be wrong. That way I can say, see, this is why I tell you not to do it. But I can't do that today because it worked. So I'm a little bit frustrated in that respect because I wanted to be able to say, see, now I told you that's the why. That's the why. Okay. Everybody thinks when I say don't trade on Mondays, it's a every Monday thing. When in fact, on non-farm payroll weeks, you want to be trading every single non-farm payroll week Monday. Every single Monday of non-farm payroll, I'm in there trying to see a trade come to fruition. I'm looking for it. I actively tell my students to look for it Monday, Tuesday, and come 11 o'clock on Wednesday of that week, you stop. If you do anything, it has to be in a demo. Okay? It has to be demo. Because the likelihood of you having the experience or the ability to read price correctly and not be lulled into the little fake outs, the little consolidations that all of a sudden spike in the direction that you weren't expecting, the deep retracements that you weren't really expecting, that type of thing causes emotions to rise up, and then you start making bad decisions and impulsive decisions and trading that. That's what classically happened to me when I was younger. So I'm teaching you from experience. I'm not just talking about something conceptually that I don't have any skin in the race where I didn't lose. I lost. I blew dozens of accounts over my career, and there's no shame in that. The lessons that I tell you and why I'm so accurate when I share it on Twitter, all those lessons I learned from them. But you don't need to go through those same lessons to learn. Like I'm trying to spare you that, okay? And some of you just want to have the war scar so we can sit around in live streams or chats and say, yeah, I got that too. I see. I'm just like you. We're brother in arms. That's dumb. You don't want to do that. I'm working very diligently to try to teach you in lectures and encourage you not to make the same mistakes that I have. So that way it makes you better. You learn quicker as a result of it without trying to promise a speedily solution to what it is you're seeking as a model and discover yourself as a trader, because all that's going to take its course at its own pace and no one can speed it up. You can't speed it up. It's going to happen in its natural progress and organically. But apart from that aspect of trading and how to learn how to be a trader, the other things that I teach are pretty static. There's got to be rules. Okay, my son breaks the rules and he doesn't do what I ask him to do because he's bringing what to it? The human element, the unruly teenager, the I don't want to listen to dad because I'm at that age where I'm getting to where I'm an adult and I don't need to listen to everything dad says. And he wants to be able to say he did it his way, like every young man wants to do. But he's discovering that dad's more right than he's wrong. Okay, and without breaking his spirit and his will, he's learning by small little cuts and he's realizing, okay, that's just trying to do it the right way, and I'm resisting it. So I'm hoping that he'll come to the conclusion that he just simply needs to listen to the old man. Okay, I've been around long enough to know that this is the way it works. Now, that was a long monologue, okay? But that was kind of like the whole gist of what I was talking about as I was referring to certain things and why it's important to have this expectation about this particular week. And I didn't need to do it all over the course of like 40 minutes spread out over that entire hour, because that's exactly what I did there. Otherwise, it was just me pointing to levels and saying, I want this to happen. I don't think this is going to happen. So I'm going to try to redo that as best as I can, knowing full well that I'm probably going to forget something because, like I said, I just talk. Whatever the price was doing at the time, I was referring to it as it was happening. But to clear the whole thing and make it very clear and blunt, I literally gave you on Twitter what it should have done, and it delivered like gangbusters. So there it is. There was no other thing out there that I said incorrect. There was nothing that I did wrong. It was clearly outlined, but I wanted it to be wrong for the sake of being able to say, this is why I teach you caution on this week. Okay. As a concession, and I had no intentions of doing this, I'm going to be live streaming during the non-farm payroll numbers tomorrow. So I'll start the live stream at 8 o'clock. I'll check to make sure the audio is in place. That way everybody can hear me, and I'll stay with you until 9 o'clock. And then after that, I'm going to go over there and hang out with the #1 day trader on YouTube, Patrick Whelan. I said that this morning in a live stream, and I wanted to get a rise out of him. But obviously, there was no audio. So, I mean, it is what it is. I'm trying to be nice. Okay, everybody tries to make me out to be a villain. Okay, and make me out to be this this guy that wants to start trouble all the time. I just want to be part of the community, and I'm not trying to be an adversary to anybody. But anyway, I'll be live streaming until 9 o'clock tomorrow. Now let's take a look at the NASDAQ on the hourly chart. You're going to take that sound bite and run with it. ICT said the #1 day trader. All right, so here is the hourly chart. And I don't believe I'm going to be able to do this like that. I need to have the annotations on. There we are. All right, so I walked you through as it was happening, and I utilized the, what is it here? Hang on, I apologize. I'm a little disoriented because I don't know why it's doing this. I don't know if that's truncating the borders. I hope it doesn't, but if it does, I apologize. But I was using the electronic trading hours and the regular trading hours. And I went to regular trading hours, and I highlighted how the difference between where we settled the previous day and where we opened up, and how we were using the opening range of the week. Okay, so there's new week opening gap and the high and low of that specific price level, and toggling back into electronic trading hours. Well, if you look at where we were trading at here on the hourly chart, here's Friday of last week. So there's your closing price. That's what's being toggled and highlighted there. That makes the new week opening gap low. And then where we opened up here on Sunday at 6 p.m., that's the beginning, the opening tick. That is the high of new week opening gap. So early on in the week we had Tuesday, we sold off. We traded down below the rejection block in here. And then it came all the way back up and traded inside of that new week opening gap. And what I was measuring was from the high and the low of that range here, that midpoint here is consequent encroachment. And what I was talking about this morning was I'm not interested in, give me a second here, let me take it off. I was not interested in seeing price trade above this high. Whereas I was initially talking about it the day before, I said I was interested in seeing it when it was trading over here. I wanted to see it spike up there. But because we had broke below here and went lower, we have already swept the buy side. So while this was an initial interest for me, I was not saying that this morning I was interested in that at all. And I was referring to how I talked about it beforehand in another live stream. I said, remember, I was talking about how I'd like to see it sweep above that. I think that's reasonable to expect that. And you trade up there and go back down. And I was taking your attention into here and over here. Well, this morning I changed gears and said, no, I'm not interested in that because we've already done a run here, running up on the short-term buy-side liquidity there. And I'm not interested in needing to see it go above here because we've already did what? We've worked below the new week opening gap low. Now, since it's done that, it's kind of like tipping its hand to you. Whereas initially I was looking for a scenario that would send us above this high here. Because we dropped down and went outside the lower side of the new week opening gap, it's kind of like indicating and saying, hey, look, I'm really going to drop. When the news comes out, I'm going to drop. So when it rallies, this next rally is going to be a suspect rally or treat it like a Judas swing, like a fake out. Okay. Now, what I was hoping was going to happen was because I outlined it and I said, okay, we've already ran this shallow run above this high here, and I did this. And you'll see it in the live stream. And I went above it just a little bit. So even though this is very shallow, what can happen is it can still drop down and take this liquidity here and not go for this one and not go for this one because all this balanced price range in here, which we'll see in the 15-minute time frame, it might not be enough to get through it today, and they may need to do it tomorrow. And what will happen probably is it'll go down below this one and then spike up and then run that later on. And that's where I would be wrong. Okay. So that was the argument I was trying to present, that even though I'm going to outline it, even though I want it to behave a specific way, and this is how I would trade it based on this, where I'm going to be wrong. Okay. And I want you to understand, you would not have known this had I'm not talking about it now, because you didn't hear the audio, but I'm walking you through the chart, pointing to certain things. The fact that I'm teaching it to you is because I want you to understand that there is risk here. And it just so happens that I happened to be right again this morning when I was in my mind thinking, okay, this is still reasonable where it can pan out, but I'm allowing for a scenario where it could still very well go up there and take that high out, and I would be wrong. And if I was trading with a real account today, I would have taken a loss if that happened. But because I'm teaching you to respect that risk, I don't want to come out here and say, okay, here's another day where I made $15,000 and this is how I did it. Here's a dose. I'm trying to convey this so that way you adopt it early on and you learn to be disciplined. It went up there and it was a very, very shallow run. And because we went below the new week opening gap, it failed. The logic why I was trusting the fact that it was just a shallow run above that high here is it did it and it rejected it. So that was good. It was occurring ahead of the 8:30 news release of the employment data. So if it's going to fail to get to a level, and what level am I referring to? The new week opening gap high. So it failed to get there. So what is it telling me? It's telling me that when it broke below it ahead of time, it moved outside of it, saying, okay, any rally from here, if it rallies, it's going to be setting up a false run higher. That means faded. Treat it as a Judas swing. Okay. And where would the liquidity be? Be here and here. So what's going to have more liquidity above this swing high or this one? This is a trick question for some of you. You may not know it, and if you don't have it right, if you don't get it right, it's okay. This is where you get to learn. Hang on one second, I gotta get a drink. This short video is getting longer, isn't it? There's going to be more liquidity above this high, even though this is slightly higher, because there's more volume because of the bodies and how much time it's spent making that swing high. This high here was just one singular candle, right? And it's a wick. But this one here is a little bit more lengthy in terms of how long it took before it turned away and went the other direction. And the bodies are telling you what? The narrative. It's the storyline that's inside the bodies of the candles. even though the damage is done by the wicks, this is telling you that the liquidity, the extreme, it would be above here. So you got to allow for that, right? But in here, the majority of the run for that liquidity is going to be to this high, which is why you see the bodies here being where they are and not needing to go above that high. So I was mentioning that in this morning's discussion, and I was a little disappointed because this is a really good idea to look through your past back testing data when you're looking for relative equal highs. The easiest one to expect a run on liquidity, which one would you have your limit order on? Now, everybody wants to have a limit order sitting right there, right? Because it's in hindsight, it's perfect. You want to use the best scenario when you're trying to learn, but that's not what you should be doing. You should not use the best case entry scenario. You should use the worst entry point, but still fit the criteria for your model. Using that as your back testing data, because you can form fit this stuff and torture the data, and you can have back tested data that is total bullshit, and you don't want to have that. You want to have data that's realistic. You're not going to get the highest tick, okay? You're not going to get the lowest tick. Try to get something in the middle or very, very close to the worst case scenario. And to be realistic and give yourself the highest form of reality, use the worst case fill for yourself, the least amount in terms of profitability and the worst entry point, but still meeting the criteria. Anything above this high here. Okay, so what that would be is basically that high in one tick. That's where you would have your limit order to sell short at, not here. And chances are, if you had it right there, you may not have been filled. How many orders were being booked and filled on that wick just at that tick high of this candlestick? You're not going to get hundreds of contracts there. So the chances of you being the lucky participant, okay, the price is right and you get to be called and come on down, you get a car, you get to have the vacation like the old Price is Right show. The price might be wrong for you, okay, and you won't get filled, and that's very frustrating. And I talked about this morning where I went into the lower time frames and I was talking about my son's model, and we'll get into that. And I explained how the market could come up into a fair value gap. And if it did, this would be his model. And I was pointing to the sell side liquidity, but it never gave the fill. And I talked about how, let me save it for that part. Just, I have to make a mental note that I don't forget that part. But the opening range gap high here is the daily settlement from the previous day using regular trading hours. That's what this is here. Okay, so if we're opening below or we're getting close to trading the opening bell at 9:30, if we are at electronic trading hours below that previous settlement price using regular trading hours, you highlight that, and that's why I have on my charts opening range gap high. If we were trading above it and at 9:30 we opened and the previous settlement date or previous settlement price is below it, then this would be labeled opening range gap low. Okay, you want to at least have that on your chart because it's going to be many times like a magnet. It'll cause price to revert back to it many times. Not many times intraday, but many times on the daily range, it will try to get back to that price level. It may not be successful in doing it. It may make it a really good solid attempt to do so, but then fall out of interest. And then the algorithm will start repricing and sending price the other direction. That in itself is its insight that's helpful for framing or confirming a narrative or proving that your narrative that you went into the day with is incorrect. So it's a lot going on in that first 30 minutes. That's why I use a 30-minute opening range. This is an opening range gap. That means the previous day's settlement and where we open at 9:30. Okay, so that's the distinction between the time frames and what I'm labeling there, what I'm showing. And I've already taught this, by the way. There's a teaching on it. Opening range gaps. It's a very simple little tutorial. It's not very long. All right, let's drop into I mentioned how when price was in here, if it runs that shallow and the 8:30 news driver sends price lower, I want to see how it attacks the liquidity here and here. And in this area, when we go down to a 15-minute time frame, this gap here, I call out the 700 level, but I'm not really referring to it to the tick. I just mention it in passing that if we get through all of this area in here, we could come back down and maybe spike through the gap that's forming or formed here, right there. I'm not showing you with my cursor, okay? So that way the people that want to come back and say, he didn't say this, he didn't say, I didn't say anything as far as I'm concerned. You didn't hear me say anything. The audio wasn't working. But in my analysis, talking audibly, I was saying that we could see it trade down to the 700 level and spike through it. But I would want to see the body stay inside or above this gap because that'll give me range for tomorrow. And that's what I was referring to in audio. So it doesn't matter. Okay, it doesn't matter because I show you a very specific price level of 14,804 as a sell side. I do have a level there, and I talk about that as the easier low-hanging fruit. So while I'm not drawing all that much of attention here, I did mention 700 in the audio. Forget that I even mentioned it, but I'm doing it for the sake of honesty and continuity. I'm trying to fill in everything that I didn't have out in audio for you to hear at the time during the live stream. But even with that out of it, okay, say I didn't say it when I did, but say I didn't. It's irrelevant, okay? It's irrelevant. 15-minute time frame we're going to drop down into now. All right, and here is the high of that wick. Here's all those candlesticks creating that more meaningful, more prominent swing high where the liquidity is going to be larger here than it would be over here. So a good exercise would be for you, like if you like to use those tools and crutches that retail traders lean on, which is like a book map, or if you like looking at level 2 data and you trust it. I don't trust it because it can be spoofed. Test this stuff when you're watching price real time. Okay, see if there is not a larger pool of liquidity where there's a high that has bodies, whereas if you look at a high that's mainly predominantly created on the basis of a wick, there isn't a whole lot of there's not a whole lot of volume in that wick in relationship to what the volume would be in the swing high here. There's a whole lot more trades being booked here than there is on this one single candle inside that wick. That's really what I'm trying to get at. So hopefully that was a better way of saying what I was trying to say earlier. Like I said, I wish I could have had the audio because the way I described it this morning was just really good. I felt real confident that I conveyed it very clearly, succinctly, and it just, like I said, I don't have a script, so it just came out nice this morning. I can't recapture that moment. But the buy side is swept here. The candle here at 8 o'clock, we start to see it break down, and the new week opening gap low, it pierces that. So I was referring to how we broke down through it. I like the fact that we went through the fair value gap that was formed around 6 o'clock. I'm not pointing to it, I'm talking about it. So we went below it here. So where was the close on that candle here? Right here. It's below it. It wasn't like we just had a mohawk, which is like a little wick or a tail on a candlestick, which is absolutely permissible. This is indicating a whole lot more is going on here. So if that's the case, then we can go back and revisit all of this imbalance in here, all this right here, and anticipate the market likely coming back up into that. So on a 5-minute basis, I'm going to elongate a lot of this here. On a 5-minute chart, we're seeing how the market breaks aggressively lower here, even on the 5-minute chart. And a lot of the conversation I was having this morning, it was with the benefit of me having a laptop sitting on my lap. My son wasn't with me. I wanted him to be with me for the duration of the morning. And I have charts and monitors in front of me too. So about, I guess it would be like 10 feet from me, I have 1, 2, 3, 4, 5, 6, 7, 8 24-inch monitors. And I casually look over there and I see what these other markets are doing in the time frames that I have zeroed out on each one of these monitors. So I was commenting on how I like the difference between how the E-mini S&P was behaving in relationship to the NASDAQ. And for those that understand SMT, you can go and look at your charts. So I mentioned a couple things in passing this morning about how it doesn't agree with the price action. And I think this is going to be met with heaviness as the NASDAQ rallies back up to the opening gap range. I'm sorry, opening range gap high, which is this, again, this level here. And that is the previous settlement price on regular trading hours. Okay. When you have that, wherever we stop trading using regular trading hours, you want to have a line segment. Like I use this one down here. See over here, horizontal ray. Wherever we stop trading using the regular trading hours, as soon as it does that, easiest thing you can do is immediately toggle it right there, drop it on your chart, and label it, opening range gap settlement. And you adjust it where this would show high. You just want to have this initially. Okay, this is how I teach my son, and that way this. If I'm teaching it him this way, it's good enough for you too. Okay, and what will happen is you're watching price ahead of 9:30. So around 9 o'clock, 9:15, you start paying attention to it. And are we above or below that previous day's settlement price? Using regular trading hours, okay, on TradingView. So I don't care if you don't like using TradingView. I have to have a medium that everybody has access to, okay? When I was teaching Forex, I predominantly used MT4 until it was shown how it can be rigged and gamed, and I didn't do any of these things that people accuse me of. I've never used a white label broker. I don't know anything about how to do it. I know it can be done. I know other people have done it. I suspected a lot of times that it was fake, but I didn't know what would have been used to do it. So I asked the community collectively, I said, I don't want to use MT4 and I don't want to use MT5 because I think it's the same bullshit. So what medium should we all go to? My community collectively said use TradingView, and we all migrated to this. Okay. I can't game this. I can't rig it. I can't do anything. I literally call this stuff before it happens. I've sat in live streams and called every single fucking candle and did it live. Not just once, weeks, months, and for years now. I have a litany of user groups in a paid setting where they all watch me do the same fucking thing. Okay. They all watched it. I don't know how else to do it except for sitting out here and do the order entry in front of you, which I'm not going to do because everybody else is ripping me off and you can just see it. I'm not going to make them look smart so they can sell their signals that they're really just parroting what I'm doing. But the settlement price label here, you would change it to if the price between 9:15 and 9 o'clock is, if the real-time price is above that settlement price, then you would label it the low. If the real-time price between 9 o'clock and 15 minutes after 9, before the opening bell, New York local time, everything I'm talking about time-wise is always New York local time. Okay, so East Coast time, Eastern time. If price at real time between 9 o'clock and 9:15 before the opening bell, New York local time, if it is below the settlement price, you would change that settlement label to high. Okay, real simple, right? Real easy. It's not technically complicated, but that's how I teach my son. That price, that previous settlement price, is going to many times be revisited, regardless of what the daily range does. It doesn't necessarily imply or mean that it needs to go back up there to go down. It doesn't mean that it can't go up there and keep going higher and not even revisit going back down as a support level. It just means that it's going to want to gravitate back to that, usually within the first 30 minutes. Not always. It's not a hard and fast rule where you can set your whole lifestyle around it. It's not cast in stone, basically. It's just a thing that I like to look for. The market's likely to do it, and how it does it. How does it perform that function? This morning I was referring to it because we had the SIBI here at 8:30, the sell side imbalance, buy side inefficiency. And because it had that on the 5-minute chart, and we're going to drop down to a 1 minute in a second, I felt very confident that we would see it draw back up into this. But once it gets into this area here and touches, it needs to touch the opening range gap high, which is that level here. Once it touches it, we can allow for the market trading just a little bit outside of that fair value gap, which we'll show specifically on the 1 minute chart, which is what you're seeing highlighted here. Okay. But I said, remember that we can see it trade outside of that fair value gap because we're in the early stages of what? The opening range, and 930 tends to be a little bit wild, and we can see a little bit of discrepancies that would otherwise like between 10 o'clock and 11 o'clock. There's far less likelihood of a mohawk forming. It can, but we really want to expect the form around a fair value gap that we're watching and stalking between 9:30 and 10 o'clock because there's a whole lot of orders coming in. Everything's being piped in that first 30 minutes. It's amateur hour. Everybody's trying to do whatever they think is supposedly the right thing for them to do because they're in a chat room, they're in some kind of signal service, and everybody wants to follow the leader. Okay, so because of that, it's going to create these errant price actions where it goes beyond the level of precision, but we allow for that, which is what I refer to as a mohawk. Okay, and we're going to drop down into the 1 minute chart now and try to finish this discussion. So in here, there's a few things that I was looking at. How, when it was trading here, first of all, the fair value gap I've highlighted was this candle's low. Let me widen it a little bit. This candle's low. That candle's high. Okay, so that's the sell side imbalance, buy side inefficiency specifically, which is a fair value gap. Meaning that it's sell side imbalance. That means the imbalances on the sell side, it needs to be what? Repriced higher. So it's inefficient in where? Buy side, delivery. So the market will seek to trade higher to reprice back up into this candle's low. Or, as I mentioned in the audio this morning, but you didn't hear, it can trade to the midpoint of this up close candle, which is mean threshold. It's perfectly permissible. So I said, how far can, if it was going to have any mohawks or trade beyond this, because I was talking about how when it was forming these right here, I said, be careful because that's relative equal highs. We could probably see a mohawk form getting above here and getting outside the fair value gap. And how far would I be willing to let it trade to and not freak me out? Is I said, remember this up close candle here. That's going to be a factor in the mean threshold of that. As long as we don't close above that, everything's still looking like it's going to go lower. I might be wrong, and I may be wrong, and this is the reason why you don't want to be trading as a brand new trader with real money on non-farm payroll week, Thursday and Friday. That was what I said this morning. You can't hear me saying it, but you've heard me fucking say this dozens of times in other videos and other Twitter spaces. I've said this ad nauseum. Okay? I'm not cherry picking certain things to say here. I'm literally telling you how everything I've talked about before is being applied in this very day. So we get the mohawk here. So we clean up these relative equal highs. We spike through it here. And I said, now we want to see it reprice aggressively below the swing low that's right there. Prior to all this run up, I said, watch this fair value gap in here, which is the separation between this candle's high. I'm sorry, this candle's low and this candle's high. And that's the buy side imbalance, sell side inefficiency fair value gap, that one right there. So the 8 minute after 9, 1 minute candle. I said, that's going to be influential this morning. And you want to be watching it because it's going to probably either, if I'm wrong and it never goes back up to that fair value gap and just drops straight off, we can use it as an inversion fair value gap. But if it trades around it and above it and comes back down and touch it, it'll use it as a springboard to get up into that fair value gap that's red. Look at the bodies here. Look where they're stopping at. The close is on the very candle's tick high of that candle, which is the low of the fair value gap that's shaded in blue. Its high is 14,886 and a half. What's the close on this candle right here? 14,886 and a half. That's perfect. That is algorithmic. That has fuck all to do with Elliott Wave, has nothing to do with Wyckoff, has nothing to do with anything that's related to anything that you would see in a book anywhere else except for people that make books now with my stuff. And then we came back and touched it here. What's this candle's low? 14,888 even. What's the low of this candle here? 14,888 even. Perfect. You're going to fucking tell me that's buying and selling pressure that causes that? Bullshit. So it rallies up into, now I'm saying as it was happening, I said, now here's we're having that rally. And this is the moment, okay? This is the very moment where I am sitting in. Right now I have 7 live streamers that I sit in their room. I only really try to talk to 2 of them. That's Trade by Matt once in a while. And sometimes I'll chat and say something in Patrick Whelan's live stream, but usually they're so rowdy in there, they get a rise out of me. So I ignore all that bullshit. But I love reading those 2 chats and the other gentlemen's live streams because they have their chat window open. And I'm reading their audience and I'm looking for very dogmatic opinions about we're going higher, we're going lower. And it's uncanny. It is literally uncanny when they are collectively all barking about how it's absolutely going to go higher. And I'm outlining it's going to go lower. I'm right. I'm right. That's the way I'm looking at it. As the trader, that sounds arrogant, it sounds conceited, it sounds narcissistic, but it's the fucking truth, and I'm being honest. I want you to investigate it yourself. Don't just take my word for it. I'm not saying that every one of those people are failed traders. I'm just saying as a consensus, as a sentiment or market vein indicator, without having anything on your chart, you're seeing people take the time to type in on their keyboard to tell other people. Why would they want to do that? There's 2 things. I mentioned this morning. There is a team mentality, like a tribe mentality. Like our community gets a lot of flack because we call bullshit on everything else. We don't think anything else has anything to do with why price is going up. And that's because they say what I have said and I have proven. Not at one time, but for years, to a degree of precision that no one else is able to do. That's why my opinion is that everything else is nonsense. I'm not stating that anyone else's methodology or their approach to trading can't be profitable for them. I'm just saying the root cause of why price is doing what they believe it's doing has absolutely nothing to do with what they're subscribing to or what tools they refer to. It's literally time and price only. Inefficiencies and liquidity. That's what goes on. That's what these algorithms are referring to. The algorithms that are pushing price around, they're not cycling through a bunch of retail bullshit and what they're going to use today. What's the flavor of why we're going to make price go up today? Is it going to be LA wave? Is it going to be supply and demand? Is it going to be support resistance? Is it going to be moving average crossovers? There's no way that there would be a way for that to be systematic in choosing what school of thought we're going to use, because every fucking single one of those things are not in agreement. They don't all agree. If they all agreed, 90% losers wouldn't exist, would they? The statistics are 90% of traders lose. So if all those things worked and everybody trades with the same bullshit, everything that I'm doing, they say I renamed. If that's the case, then why the fuck is my shit worth 90% plus and everybody else's stuff doesn't? If I just renamed it. I'm saying that facetiously because at some point, and I said this morning, at some point you have to concede and realize that what we're showing you here is the market. This is it. This is the source code. This is the shit that you don't know about, and nobody else out there can replicate it with retail bullshit. It doesn't work. It doesn't cut to the core truth of what makes price go where it does, where it stops to the tick, and then does what we're expecting it to do. How many times can someone be consistently accurate with precision like this and use something outside of what I'm trying to teach you, and it's not linked to anything else? So that's what I was trying to promote, that whole school of thought, and challenged everybody this morning. And it wasn't with that many curse words, but I'm frustrated because the way I said it this morning was more eloquent. I didn't say anything blue collar, and I was really satisfied with my delivery. And I wish I could have captured that audio because it was very, very good. It was very good. I was proud of it. I was happy about it, and I was waiting for the feedback on Twitter, and it was like, there's no sound, bro. I'm like, what the fuck? So anyway, we want to see it trade below this low here, and it spiked through one more time, And I said, on that candle at the close, we want to see it we want to see it become extremely heavy. That means it needs to leave now. So here we have it. We open right at the opening range gap high. Starts to break lower. I said this candle, as it was trading up, I said, watch and see if it touches the low end of the fair value gap. That's pink, the red one, because it would act as another touch algorithmically, where if it does hit it, we want to see it like basically the way an immediate rebalance would behave, where it touches it and immediately runs away. Well, does it get to it here? Let me zoom in a little bit. See how it falls just short of it? And then it becomes real heavy. I mentioned as it was doing that, that's really good. That's a good signature. That failure to touch it again means that we're off to the races. Where's it going? Initially, it's here. And I said, if we break harder, you want to watch that same fair value gap, because if it does come back up and touch it, it's going to act as an inversion fair value gap. But there was no necessity for me to draw it out. And you see me teach this. You see me do it in my live trading examples. I've used this logic, okay? It didn't trade back up to it close enough for me to draw it out, drag it over to the right side. When I'm talking about on Twitter, I'll say use the fair value gap at this specific candle by time or time frame, and I'll say extend it to the right. Well, what I'm teaching you is look at it as a potential inversion fair value gap. Well, there was no necessity for me to do that here. That's just why you don't see me doing it in the recording. But audibly, I was saying if we started to trade higher in here, I said I'm watching this candle here. I may want to extend that fair value gap over, but until it gets there, I'm not interested. This is watch and see how it behaves. This is something you would have done without me showing you this. It's just the way it is. Whenever you have a fair value gap that you've utilized early in the session, immediately after the opening range, or while the opening range is underway and there's a displacement, which is what we're seeing here, it breaks aggressively below that low. Once we cut through the new week opening gap low, that acceleration and delivery lower, I was mentioning this morning that it should start spooling fast, aggressively seeking sell side. So in your mind, you would be looking at this, and for your back testing, for your journaling, it's this low here, and because that's the first area of sell side, we don't want to see it just hit that and have a deep retracement or sharp retracement. We don't want to see that. And the first stage of sell side, if we're going to be bearish, we don't want to see price come back up to an inefficiency right away, real quick or deep. Why would we want that to happen, or not to happen rather? Because we want to see imbalances stay imbalanced, because it's indicating that there's a lot of heaviness. What do I mean by that? Well, this down close candle here, it's piercing through the new week opening gap low. That's a significant level for the weekly range. And we're having the tail end of the week, which is Thursday. We're having employment number data come out at 8:30. Everything's happened now at the opening at 9:30. So we had all of this run here, which is a Judas swing. Then we had displacement below here. We're piercing a level or a PD array that's relevant to the weekly range. So if that's happening at a time of the day when the damage is already done, we went up into a short-term premium, we've taken buy side here, traders are trapped on a breakout above here, and we've retraced deep enough to rebalance this area back to this order block. We went back and forth in here, and then we left the range. So now this imbalance or fair value gap is a balanced price range. There's no necessity for me to anticipate a return even back to the halfway point or consequent encroachment. So I was referring to how a stop loss, if you had a short one, could be moved just above the halfway point of this fair value gap. It could be placed in the upper quadrant, and you could leave it there for the duration of the trade. The next level of sell side is here, right there. And if you go back and look at the live stream, again, you don't hear me say it, but I put the actual level on 14,804 in the swing level of that. Excuse me. This low here. And I talk about how this level is kind of like the low-hanging fruit objective for the lion's portion of the day. If it was to go further and trade down into the 700s and overshoot that a little bit, that would be fine. I wouldn't be in the trade for that much of the run, is what I'm saying. And why I wouldn't hold it for that long, because it's a non-farm payroll weak protocol, and this is where I would have the cap for my trade objective on the downside. And that's what I was referring to when I had that level highlighted. And you can go back and look at the time frame or the chart in the live stream as I was doing it. It's the big blue horizontal ray in the live stream, and it's essentially the 14,804 level. But going back to the delivery and price over here, on the chart example, I gave this here as, this is where your sell side would be. So from this level here, go up to this to trade for then sell side. But I only had a couple minutes to put that tweet together, and everything that I outlined on the live stream in chart form without actually saying anything, sell side is labeled multiple times in the live stream. And the lowest one that I was interested in for the day was 14,804. And we went down below that here. Now we spent a little bit of time consolidating here. Notice that we didn't go back up to rebalance or reprice any of this inefficiency that cut through the new week opening gap low. Notice that? We didn't even get back up to this fair value gap to allow for it to behave as an inversion fair value gap. So now let's go back and look at some things here. And Patrick, if you're listening, this is something that you want to be looking at too, because I want to see you holding your trades, with a piece on. Just leave one on. I know you're trading with more one contract. So when you have that impulse, they want to close it because you want to have the lion's portion of your trade win and you want to bank it. I get it. Leave one on, because you're talking during your live streams and you're literally saying you think it's going to go down to the 20s. I was agreeing with you, but I'm not going to try to say yes, because it's going to seem like I'm trying to coax you or coach you in front of your audience, which would be extremely rude. Okay, but I'm telling you that if you would just simply leave one on, who gives a fuck if you see it come back and it stops you out? You've taken a lion's portion of the trade-off. In your head, you want your audience to see that you did it and you got out, and it removes that, I can breathe now. I did it for my audience again. We're winning, and that's great. And that's admirable. That's great. But if you simply would just hold one contract, leave a car on, let it ride the full destination, let it go, you will start seeing that one contract on makes more money than your whole pool of the larger portion of the trade you're closing. Your trade durations will lengthen. They'll be longer than they are. Your hauls and your takedowns will be larger in denomination. And it'll help you learn to hold on to these bigger runs. You won't be able to take these 75 to 100 handle runs consistently until you do this stage, this step. And then once you do it for a little while, and I'm not, again, I'm not trying to pretend to be your mentor, but I like watching your live streams and I see opportunities for you to improve. And your students that follow you, if they're going to listen to what you're saying and what you're articulating that your interest is in, by default, because they're going to be trying to, be Johnny on the spot and follow whatever you're saying and doing. If you're doing this and you're following sound logic, which I believe it is, by the very default of you saying this is what you're interested in, they're going to do the same thing in their trading. And by me telling you this, I'm increasing not only your ability to make more money and know what you're looking for in terms of longer term targets and conquering that thing that you have vocally said you wish you could hold on for these trades, and you show emotionally your disdain for your inability to do it because you're influenced by the audience. You're trying to give them consistently winning days. And yes, you're able to do that. You're not losing all that many times. And when you do, it is what it is. Write it off as it's a tax. Okay, everybody's going to pay it. But your hurdles are easily overcome if you simply just say, okay, I am feeling right now, and do it audibly, talk about it. Say, okay, I know that I want to get out of the uncomfortable feeling I'm in right now. I want to take profit. I want to close everything right here. But because I know that this is what I do, and I have seen enough of this to know that I'm never going to get that bigger run that I believe it's going to keep going to unless I leave something on. So I'm going to start conditioning myself. I'm taking the bulk of everything off this trade right now, and I'm leaving one on and I'm locking in $100. Who gives a shit if it comes back and stops me out? You're going to find that that last portion many times is going to outperform what you took off in the bulk of that first part of the trade. Because the bulk of your trades, from what I can tell by reading what you're sharing, that's made public, your trade durations are very short. And it's very hard to compress 100 handles or 200 handle runs in a few minutes of time. And the feeling and the impulsive nature of what you're experiencing, and it's not limited to you. Okay, so I hope you're taking this as constructive criticism. And I mean it that way. I'm not trying to be spiteful. I'm not trying to troll you. I'm not trying to be mean. I really want to see you be big. Like, I really believe that your character, even though it's abrasive, I look at you like a rowdy Roddy Piper. You know, in wrestling, I love the guy. I loved him because he would push everybody's buttons. He would get the audience all worked up in a frenzy, and people loved to hate him. But he was a great performer. And as a live streamer, I think you're a great performer. You challenge the crowd to like you and then not like you, but they still keep coming back. And that's a character strength for someone that's a showman. You have character strengths where a lot of YouTubers are just straight up assholes, and that's the reason why they fail. And there's other people like Trades by Matt, generally nice guy, laid back, chill. He's not trying to be the best of everything. He's just out there hanging out, being a part of the community, and then doing his thing. Not trying to start up any drama or whatnot. And then you have you, where you're literally growing as a trader and your confidence level is increasing. And for people that have been doing it a lot longer than you, that knows a little bit more than you, they may not be so forthcoming to tell you this because they think that you're a jerk or they think that you're ignorant. I just think it's part of your showmanship. And anything that you say about me, I've never taken it personal. And I would love very much to see your channel to grow explosively. And if you do some of these things, your viewership will see what you've already shown openly, where you're trying to overcome certain things and you've been emotional sometimes, which I absolutely love that because there's so much bullshit on YouTube. They fake it. Look, man, there's going to be days if you're trading, not you specifically, but anyone that's trading with real money, if you do something and you know that you just did it wrong and you fucked up and you lost money and you knew at that moment you shouldn't do it again, didn't go back in there, don't do it again, stop, but you do it. You might break down and cry. You might get fucking pissed off, put your fist through a monitor. I've done that over the years. I've done that. But people that pretend that they don't have those breakdowns, that they don't have that measure of frustration, they're lying. They're bullshit artists. And that's one of the things I like most about you. And I tell you every single time when you pull back the curtain and you say, okay, this is what I'm dealing with. I'm frustrated because I just wish I could do this. That's exactly what I like about you. That's genuine. That's real. That's the real shit that people on YouTube, that's what they tune into because they can relate to that. They're not looking at somebody that's buying a lot of stuff and saying, well, I want to be like that. Really, they're resonating with you as a real man that's saying, look, I don't have everything figured out. I don't have all the answers, but I'm out here doing the best I can in front of everybody. By hook or by crook, I'm either going to win or I'm going to lose. And my mindset is I'm trying to win. And the things that I see are simple barriers that you just have to just take this step forward and say, you know what? It's not failure if I leave one on and if it comes back and stops me out. Because if you keep doing it that way, what will happen is you're going to catch a tiger by the tail. And it'll run and run and run and run. And I like literally look at the responses in your performance where you have said openly in your live stream, I think it's going to go down here. Watch, it's going to go to that level. It's going to go to that level. And I'm nodding the whole time. I'm like, yes, please just let it, hold it, hold it. Don't close it all. Leave something on. But I'm being respectful. I'm a part of the audience. I'm not trying to be your teacher. I'm not trying to be a superstar in your live stream. I don't like when other people talk to me when I'm in other people's live stream. It's rude. And I tell my students, don't talk to me in someone else's live stream. It's a dick move. It's very rude to the person that I'm in there being an audience member of. It's embarrassing. And I believe it's not really technically my students that are doing it. It's assholes out there that want to build this argument that our community, the ICT brand, are assholes and we're pirates. You know, the Caribbean, we got there and just, run amok and be stupid. I don't want that in my community. And I'm trying to convey the idea that we can coexist, even though that we trade differently. You can be profitable. We can be profitable. We can have our own ideas about what works best for us. But I see opportunities in you that you aren't going to see the benefit of growing to unless you make certain changes. And the changes I want you to understand, because while you're doing it, while you're doing live streams, you get caught up in the audience, which is exactly why I would never allow that chat window. I would never do that. That's why it's not here. Not because I'm fucking scared of anything, because on Twitter, anybody can talk to me. Anything, they're tweeting to me all the time. Stupid fucking documentary links and shit. Who gives a fuck what anybody says? I'm out here proving it. Proving it. But they're ignoring that. But you get emotional about what the people say in chat. And if they bring up my name, you lose your mind about it. Okay? I'm not against you. I'm not in there trying to rabble rouse. I'm in there because I'm watching you improve. What you used to do 2 years ago, totally different today. Totally different. But you're still bringing your personality into it, which is great. It's great because you are able to resonate with your audience. And for people that are aspiring to be a live streamer, or you're wrestling with these types of things, I want you to listen, because it's not just a discussion I'm trying to have one-sided with you and Patrick. I'm trying to convey this idea that many of you are probably doing the same thing. Like you feel impulsiveness to get out of the trade because you just want to get out of that uncomfortable state of, I'm in a winning trade. I'm in a really good profit. If I close it right now, nobody can talk shit. And if you were honest, Pat, I'm telling you, that's exactly what you would say. Yeah, that's exactly what it is. Because I want to be winning. I want to stay winning. And if you're making 4,000, 5,000, whatever it is, that's solid numbers. And it is. But if you don't ever take a step out and say, okay, what happens if I say I'm going to just take 3,000 of it and leave that last contract on and see how far that car can drive? Let it run until it runs out of gas. If you only get stopped out, it's not a failure. It's not a failure in my eyes. To somebody else in the chat, they're going like, oh, you should have known better. Fuck these people. They're in there watching your live stream. I know how to fucking trade. I have a larger audience, and I'm watching your live stream because I'm actively interested in seeing how you improve. You can tell me, hopefully politely, because I'm not trying to be a dick. If you don't want me to give you any kind of criticisms that I think are constructive, or any kind of feedback, just say the word, bro, and I won't ever mention it again. It means I won't say anything. I'll still watch your live streams. I just won't comment ever about you again, out of respect for the audience members not having the fuel or ammunition to try to twist it around and make it look like, I'm trying to teach you, or you do this or do that. Who gives a fuck? Okay? Who cares about all that dumb shit? I want everybody on the internet, everybody, to succeed. They're even the worst of the worst that hate me or try to make money off my name. I want them to do well. I'm not a person that wants to see other people fail. I want other people to succeed. But I see the same things happening with my own students, where they will say the same things that you're making public. You're showing your frustrations that you knew it's likely to go down there, but you don't do it. And the root causes are, you want to deliver the win, the solid win of consistently big wins, and you want to be able to tell your audience and other YouTubers saying, look, dude, I'm doing this. You're not doing it. I'm doing it. Here it is. I'm doing it. Another day, up winning, up winning, up winning. And it's happening. And they're respectable amounts of money. That's true. All those things are true. But what that is also doing, and you may not realize it, and it's causing you frustration, is it's causing your growth to be stagnant. You're not allowing yourself to grow outside of that because you're putting up these barriers that you're saying, this is my fortress and no one's getting the fuck in. I can say whatever I want to say and people can say whatever they want to say, but in reality, they have a lot of influence over you because you care enough to let them communicate and chat in your live streams, where I wouldn't give a fuck. When I was doing mentorships, I had 865 people in my first intake. And I don't recall what the live stream process or application, I don't remember what it was, but every single one of them were commenting and asking me a question. Nobody else could see, the frustration I was having. 'Cause like, what the hell am I going to do here? Like, I can't answer all these people. Like, I thought they would be real respectful and say, okay, I'll ask you if you understand this. And I was waiting for, okay, yes, we understand that, or no, and then I could just amplify it. But they were losing their fucking minds. They're like, dude, I asked this question 20 times and you're ignoring me. I'm not ignoring you. I'm looking at this wall of text going by 100 miles an hour, and I'm shitting a brick because I don't know how I'm going to respond to everybody and at least give them the impression that I give a fuck, because I do. But it's impossible. It's impossible. That number of people. And then because you're an educator, because you're running a community, because you're trying it out, you have a brand, you care. Your give a fuck is larger than somebody out there that just wants to live stream for the sake of live streaming. So to me, I understand perfectly what's going on in your head. I know exactly you better than you think I know about you, because I've been right where you're at right now. And your growth is going to be stifled as long as you keep doing what you're doing. And what you're doing is better than most people out there on YouTube. You're showing up, you're describing what you think is going to happen in the marketplace, and you're putting up numbers. Sometimes you lose, sometimes you blow your accounts. Who gives a fuck? That's part of it. You are open and you're honest about you're trying to find your successful, excellent self as a trader. That's real. That's absolutely real. That's genuine. And that's what more of you YouTubers should be trying to do. People make fun because I've literally cried and wept in discussions about personal things that happened in my life. I don't look at that as something that's, I'm embarrassed of. And you've done that. I've watched you talk about your brother and you got emotional about that. And that got me emotional watching it. That's what makes you real, man. That's the thing that people want to plug into that. Not some facade, some fake shit. And I really, really, really want to see you fucking blow up. If you do some of these things, I promise you, you're going to see your audience gain more momentum, because you'll start taking down bigger hauls. Your confidence level will increase, and you'll be far less criticism of yourself, the negative reflections on yourself. Why did I do that? Why? Don't do that. Don't do that. You're not being less of a warrior by avoiding doing that. Many times men look at this and say, I don't want to be a pussy. I'm not going to pussyfy myself. I'm going to call myself a little bitch when I do something wrong. That's the worst thing to do. That's the worst thing to do. Because as much as you want to put out this facade in this aspect that you don't care what other people say, you absolutely do. And that means that you are a caring individual. So if you're going to act in the capacity as a trader, teacher, a leader of a community, those attributes are admirable. Never try to call them something that they're not. And if you have a weakness, find a way to address it where you're being constructive about it openly to your community, and also nurturing yourself as the person, because no one's going to say anything about you that's going to cut you deeper than what you're going to do to yourself. I guarantee you, if we were talking and we were face to face, you would say, yep, you're fucking right. Or you'd be down and say, yeah, that's true. Yeah, people can have an influence and they can say something to you. Oh, ICT does this better. Or this trader did this before you. Or this one doesn't use indicators. Saying you don't give a fuck about that, but you spend so much time talking about it and defending it, shows the contrary. Who gives a fuck what anybody thinks about what you do? You're doing it. You're showing up every day, mostly, and then you do it. I think, personally, this is what I've been saying all along, is once you hit your numbers, once you get your win, done. Turn the fucking live stream off. Just kill it. That would be a draw. It'd be like, what the fuck? He just showed up, did what he said he was going to do, made money, and then that's it. He's not hanging around talking to anybody. That's not what this is about. You're there to make money. And other people would learn that that's exactly what this is all about. We're not here to hang out. This is not fucking college. We're not hanging out at a fucking frat party. You're here to go out there and kill something. Take it home and fucking eat it. That's what this is all about. You're a carnivore, you're a meat eater, well, wonderful. Do that in your trading. All this hanging around bullshit, this gossiping and talking about this one now, fuck all that. Nobody gives a shit about that. That's the beta male bullshit. The things that make you strong live there. But the things that make you better and excel are simple little changes. And I'm telling you, for somebody that's been doing it for 30 years with a larger audience, and I watch your live streams, I'm telling you, this is good advice. It's good advice. I grew organically because I do certain things and I avoid other things. And the experience I have as a teacher, as a trader, as an influencer, and as a YouTuber, I'm telling you, if you simply just let one contract run, as soon as you feel that impulsive tug of war, like, okay, if I let this fucking trade turn into a losing trade, if I give up half of it, I'm never going to let this down. You know that's the truth. The people that can't see where you actually got in on the trade and you're managing it the whole time, you see the highest high that trade's been in. We don't always see that. You see it. And what you're saying in your mind is, okay, this is a good number. If I close it here, they're going to respect that. They can say that this is respectable and this is better than anybody else that's doing it. And they're all true. But what you're doing is you're trading your equity, and you're not trading a setup. You're not trading for the potential to allow your trades to have a larger run or haul. And the only way you get that is to desensitize yourself by simply saying, okay, if I have 5 contracts on, or for the sake of argument, you're taking the trade, and say you're short. If you have 5 on, and as soon as you feel like this is usually about the time when you want to get out, don't. Close everything but one and explain to everyone, this is what I'm doing. This is why I'm doing it. Because I've been trading better over the last 2 years than I ever done in the past. And I need to grow and expand my experience and being able to take larger moves. And I'm doing it for this purpose in mind. If I get stopped out on this single runner, I don't care because I've made this much money. And saying it openly, what it's going to do is your subconscious is going to lay down and disarm yourself where you feel like you got to constantly defend yourself in the chat. You won't need to feel like that way because you've solidified that you've taken a lion's portion of that move. You've paid yourself. Now you're leaving a line in the water because you don't know that big fish might run and take the bait farther than you thought the trade was going to go. And I've sat in your live streams and I've watched you do this several times every week, and you don't leave something on. And I've said it subtly, I've said it in tweets, and I'm literally saying it again today because you had it. You had it today. You were literally calling it, but you're taking the full trade-off because you want to be able to say, I did this. But how many times when we're not seeing you, just like all of you that are listening to this conversation I'm having on one-sidedness, how many times have you had a trade on where you know that it's highly probable it's going to run another 50 handles, maybe 100 handles, but you just simply can't hold the trade because you're going to lose your fucking mind? Like, you know, this is a really good profit. This is such a good profit. Right now, I got a good profit if I just close it right here. Many times, you're going to find out that that's the very trades that you hold on to. The best trades are the hardest ones to fucking hold on to. Because you don't have the experience to know how to hold on to them big runners. You know that it's likely to get there, but you don't have the experience getting there yet. So because of that uncomfortable state of mind, that tug of war that you're thinking, shit, if this turns around and goes against me as a losing trade or gives up half of this, I'm going to chew myself a new asshole over this. I won't let it go. That's all part of toxic thinking and why you don't do those things. You have to make an allowance for, okay, I feel the impulsive nature to take the trade off right now. But if I'm ever going to have a 100 handle run, if I'm ever going to have these 300 handle days, which are coming, you won't be a participant in that, or you'll have to be in it, nitpicking it, going through and having multiple little entries and not really having anything to amount for any significance on the total run. You might get 10 handles here, 7 handles here, 8 handles here, but where's the 300? Where's the lion's portion of the 100 point run? You won't have it, but you'll have this small little block where you've had your initial trade on, where you put it on, and then you got out because you had a lion's portion of a good winning day that you defined in your brain and your mind that this is acceptable in the eyes of my viewers. But how many times and how many hours have you looked at on the weekend or overnight before you go to sleep? Man, if I just would have held on to that, I could have fucking shoved that right up ICT's ass and said, here, bitch, here's a $25,000, here's a $50,000 a day. You had them. Like you had them, but you let them go. Like you literally had a tuna on the line and you just walked over and took wire cutters and just snipped the line and said, go ahead and run away. I'm not going to bring you in. You had it. You just didn't bring it in the boat. So as another YouTuber, as someone that genuinely has an interest in seeing you succeed, I would very much like for you to listen to what I said here and take it to heart because I mean it sincerely. And anyone that's listening, if you found yourself battling something similar to that, I had that same thing. When you see me holding these trades for long durations and I'm getting big wins, I did not just fall into that. It was a struggle for me to do it. And how I did it is exactly what I just outlined here. How I did it is exactly how I outlined in my Twitter spaces. Those are the wrestling matches that no one talks about in books. Those are the things that other traders and other YouTubers don't know an answer to. Because well, maybe they do know the answer, but they won't do it, just like you're not doing it, Pat. You're fighting it, you're resisting because you think that it's going to be a weakness if you fail trying to do it. And you just want to have that big win because you've defined that in your brain and your mind and in your audience that this is what you have to come to be. You're a gladiator. You go out there and you slice up and you try to wound the next guy, which is the next trait, basically, not another YouTuber or whatnot. But that framing or defining of this is success, it can't be anything but what you've limited it to. It can never be a 300-point day. It can be a multiple series of winning trades and maybe a string or two of losing trades getting stopped out. But that day, you'll focus on those losing trades and why you didn't do it right there and forget what you did right on the other ones. I went through that stuff too. Everybody's going through that. So when I talk in the Twitter spaces and when I talk in the lectures part, these are the very wrestling matches that you as a trader are all going to contend with. And I didn't have someone that had more experience than me to talk about like this and to disarm myself and tell myself, hey, you're thinking about it ass backwards. Stop thinking about it that way. It's not weakness. It's not weakness to try to graduate into something that's uncomfortable. And the reason why you're fearful of it is because you haven't done it before. It's like anything else. Like I already know fucking way I'd be out there surfing on anything in Hawaii. I'd be expecting some shark to rip my ass apart. That's just the way I'm thinking, right? I'm not going to get out there and do that. But as a trader, I'm not fearful of anything anymore because I have desensitized myself through shit that most people would quit one instance of. I was not going to quit. And you have that trait in you. I can see it in you. If you apply certain things that are simply suggestions that are well meant and sincere, your audience will see you do far better. You will improve as a trader. You'll be much better as a educator because you'll be able to do even broader ranges of successful trades. And your trade duration will increase by default. And you'll gain much more confidence, which I'm looking forward to more rowdiness as a result of that. And I think that you're going to be a force to be reckoned with. I think that you have a lot of upside. I think that you have a character that is marketable. I think that people will love watching you more, even if you do, go off the rails and act rowdy. I love that part of you. Like I love that. But more than that, I love the fact that you are genuine when there's times for that to shine through. And I think sometimes you don't feel comfortable doing that. And I'm telling you, as someone that's a real human being that many times have shown my own emotions, and I'm not ashamed of any of it because it's something that it's real. And someone that is actively trying to learn how to do this, many times we listen to people that have no fucking idea what they're doing. They don't make money. They're pretending and they do other things. And I've been very vocal. I've been very honest because I've had so many people come to me and try to learn. I've made so much more money from them paying me to teach them how to trade than I ever did trading. I don't know why people are having a hard time with that. For a large portion of my life, I had to hide my own finances. You don't have to have that information. I didn't have to divulge that stuff. But I want you to understand who I am as a person and what makes me think and the struggles I had to go through. And when you share that part, and you don't have to, I'm not trying to encourage you to do more of it or other people to do it either, but I think that that's a wonderful thing. I don't think it's fake. I don't think it's uh, an unnecessary thing. And other people would say, stop talking about that stuff. You just talk about trading. Fuck these people. Those people won't amount to shit as a trader because they're only focusing on one thing, money. And that right there causes their failure. You as an individual, as a human being, as a trader, you're going to bring all kinds of stuff: failed relationships, things that you tried to do as a relationship that didn't pan out, jobs. If you have to have one until you become successful, you may lose it. You may not have the pay increase that you were hoping you were going to get. Your car might break down. You might get sick. You might get hurt. You might have an injury, and now that plagues you. All those things are real. All that stuff is real factors in trading. And I'm actively interested in seeing how far you go. I watch Matt the same way. The guy that does Trades by Matt YouTube channel. I wish he would stop trying to trade the shit that he's doing because he's not seeing the consistency that I would have been staying with. Like I literally would have quit. I would have quit. But I get it. He's trying to find himself. Everybody's trying to find themselves. But anyway, I went on a long-winded rant off topic, but I felt that that was the right time to do it. So there's that. But the sell side here I identified on the tweet. We actually saw it trade into that, and then it consolidated. The fact that it didn't trade back up in this imbalance is a very strong signature for weakness because it pierced and went below the new week opening gap low. That separation from where we were above it and here, that would be one of those instances. Like if I didn't have that on my chart, and I did this many times before in old recordings of me trading, where I say I want to see this portion stay open. In this case, the reason why I would want to see that stay open is because it traded below the new week opening gap low, which is a significant level. We would want to see it leave if the weekly range is going to expand to the downside. And it's a significant level for that weekly range, not just an intraday chart or intraday time frame. So you can see all this consolidation in here, and finally it breaks down. We have a small little fair value gap in here, which it trades up into. This is institutional order flow entry drill. You can see the candlestick's high here, 14,857 and a quarter. And the very next candle, we trade up to one tick above it. So it went to the 50 level. So that's institutional order flow entry drill. It breaks lower. There's a fair value gap in here. And an order block, we trade up into that, and then we displace even further, trading down into that 14,804, which was at the time of the recording this morning in the live stream. I said that would be my objective for the day. If it were to trade into the 700s, it would be without me being a part of it. And ultimately, you can see we ended up going lower. We went back up and hit the 804 level, fair value gap. Comes back and hits it again there. Displaces and then consolidates in this area here, going into the lunch hour, where we see the retracement back up in and starts running on the trail buy side liquidity. And there's that. And now we are sitting here in this marking time like we usually do at this time of day. Non-farm payroll. I don't like to go into it with a preconceived idea of what I think it's going to do because I don't know. You're not going to know. You're not going to have a consistent approach to knowing what non-farm payroll is going to do because it's fuckery. It is a circus act. It is exactly when they're going to manipulate price. And I'm of the opinion if I sat out there and tried to trade it every single time non-farm payroll came out, they would move the market against me because I have a lot of people that would follow whatever I say. And they would make me look like what I'm teaching won't work at the time when it's the highest probability of them manipulating price. So I don't open that invitation for them. That's why I don't do it. That's another reason why I don't talk openly about what I think the market will do on the Thursday and the Friday of non-farm payroll week because I know the chances of me being wrong are higher than any other time. So anyway, I've said a lot here, probably overstepped my boundaries, and I hope you understand that what I covered today wasn't meant to be, disrespectful. It was meant in light of, one man seeing another man's opportunity to increase and improve. And hopefully it was received that way. And until I talk to you next time, be safe.